I've been looking at the brochure here and wondering what my younger self might have thought of it before I was a broken man. I think if you said to the revenue, actually there's a very intelligent team come up here with a solution to global transfer pricing, and what it involves is fragmented transaction pricing and then a profit share to the residual. The response with no more explanation would be, but that's why we've got a problem. And of course, the key difference here, I think, is that it's turned the existing model upside down. The model that the revenue complain about is one under which all the profit goes to the IP residual, which you might think is very largely generated on the west coast of the US, but actually you'd be confused about that because it's all done by a man in a deck chair in Bermuda, apparently. So that's partly why we had BEPS, I think. And what this does, I think, is to turn upside down that concept, and it becomes close to something like a market user tax or a digital tax, and I'm not knocking it for that, and effectively gives more value to the customer end of the transaction. It says, well, without customers, you don't sell anything, you ain't got profits. So subject to all the deductions, we're going to allocate the profit to what, in the context of UK discussions about transfer pricing, we talk about as the local market intangible. And my first extremely pleasant encounter with this was a long, long time ago when I did look like my picture. And I acted for one of the big champagne houses, which was great. And they were unwinding a joint venture in the UK, and I asked a lot of quite searching questions as to what would happen if their local company stopped selling the well-branded and well-known champagne and started selling what I called at the time Steve Edge's Fizz, to which the answer was, actually, they wouldn't sell it. The people would say, come on, tell me where the real stuff's gone. And certainly one of my former partners at S&M, who's now built up quite a successful business in the UK producing and selling English sparkling wines, which I suspect is all we'll be allowed to drink in the future, would give testament to how difficult it is to break into that market. So I start off thinking it's interesting, but I think in a business world, if you brought Jennifer Welcome as an accountant, a business person in here, they'd say, you've all gone mad, actually, because the real value is in the product. And yes, there might be value in having infrastructure that you built up to sell that product, but fundamentally, if you ain't got the product, that infrastructure in the UK, the distribution, is an overhead rather than an asset. So that's something you've got to tackle. And I think you then have to address that in the context of what are you trying to do here? And I think what you're trying to do, apart from get consensus, which is going to be a difficult thing, I think we all acknowledge here, and your comments were interesting, Wolfgang, is allocate profits fairly around the world so that each country should get the fair share of value generated in its territory. And call me old-fashioned, but actually I think the arm's length methodology we've got currently, which certainly business people recognise, one of my favourite tricks after it's usually the Big Four, have produced their comparables, is to ask somebody involved in commercial management or a CFO in my client, does he or she know any of the companies that he's comparable with? And usually the answer is never heard of them. So, what they're doing is they're not looking at OECD manuals, they're not looking at comparables, they're applying, common return on capital, cost-benefit rewards to work out whether something is worth doing. And it's a pity we don't see more of that in the transfer pricing area. So, do we need this because BEPS has failed? Well, I don't think BEPS has failed. I've been a big fan of one particular aspect of BEPS. So there are other bits that I think are more difficult and perhaps illustrate some of the problems, which is, and Mike got this accurately up at the beginning, that what BEPS is trying to do is to have the profit follow the activity in the generation of profit. And that's a good thing. Diverted profits tax in the UK has been much maligned, particularly on the other side of the Atlantic, wrongly, I think, as a tax grab by the UK of these profits that the man in the deck chair in Bermuda is earning. And it's not, in fact, that. I think if properly implemented diverted profits tax is just trying to add teeth to UK transfer pricing and make sure we get what we deserve and what belongs to us. So that's the quest of government always. Are we getting the profit that's really generated here? Once then you move into a withholding tax area, of course, then you're saying, and these proposals have got some similarities to that, we're going to charge you a fee for deploying your capital, your intellectual property, whatever it is, lending your money in our market. And then I think you are starting to make a tax grab to another jurisdiction. And the principle of whether that's right is debatable, gets back to this same issue, which is you've developed a product, you're selling it in a market, where should you pay the tax? And if you have independent distributors, and Paul dealt with this point, selling that product in the same market, and that's very often the case with some of the high technology business we're talking about, why shouldn't what your independent distributors make be the measure of the profit that dependent distributors should make? So I think there's a fundamental question with almost any method you use that applies a formulary type apportionment or turns the world upside down, as many people would see it, as to whether you're getting the right answer. So I then come back to saying, I think, from an individual party point of view, what do governments want out of this? Well, I think they want their fair share. What do companies want? Well, companies by and large want something that's consistent, that's certain, that's predictable before they make investments. And this would have a considerable advantage in doing that. I think you'd know where you were, and Paul points out, the decisions that you'd have to make on where you put costs. I would have some concerns that it might change distribution models, and I can see the practical difficulties that arise from remote selling, particularly when you don't have a PE. For the politicians, I think they'd just like tax to go away for a bit, and it's important to note that, as has been recognised, that actually in the UK, I think it's less true in the US, this corporation tax is not a big percentage of our yield. It's stayed relatively steady at around the 40 billion mark during period since before the recession, but it's dwarfed by income tax, national insurance, and very useful VAT, as Michael said. That's what the US wants more than anything, I would say. So I think you then have to look at, well, what purpose is corporation tax paying in the UK? Who do we think is paying corporation tax? That's a question to which many people here, I suspect, have got different answers. The way I would look at it is that shareholders, I think, are entrusting a company with their capital, and corporation tax is being charged on the use to which they make of that capital. And that, I think, when we talk about taxation by residence, or where the place of effective management of a company is, gets back to saying, well, actually that jurisdiction ought to have a share where those people are located. So I think I then come back to saying, well, actually, if we have doubts about deliverability on this, and I think we must have, and anybody who thinks that's wrong should wonder how successful the MAP process has been in the past, when two countries look at each other politely and say, well, I think that's mine, and I think that's mine, and then the taxpayer loses. Should wonder how this process would work itself through, and whether people would say, yeah, well, that's a great principle, but could I just have this exclusion to it, please, and whether then it would go into the sands. And whether one might be better then saying, since we accept, one fundamental factor of human nature is greediness, and that jurisdictions aren't going to look at this in a wholly objective way, that maybe what we should do when we come to implement is use out of this proposal things that actually will work and could work as a means of modifying, and I thought I'd never say this on a platform, sorry, Reuven, I really agree with Reuven on this, but actually I don't believe our transfer pricing system is broken. I think it can work. I think there is neglect in some places, and I think the man in the deck chair in Bermuda benefits from that neglect. But in other places, I think certainly our revenue tries really, really hard to get the right answer. And I think if there's more collaboration, some areas, which is where we've gone with the EBITDA restrictions coming out of BEPS, which is in some areas, let's have a one-size-fits-all. I know safe harbors haven't worked terribly well in the US, but other areas where we can create greater knowledge about what really generates profits, greater sharing of information between tax authorities, and maybe some published approaches, combining what's coming out of this work, and then actually find that we don't need to do anything quite so radical. So those are the thoughts of Chairman Edge, I'm afraid.